So sorry friends, there is some small connectivity issue. So just I got got a result. So now hopefully in this the gap you would have solved the answer for the equation. So any guesses for the first one? So do you have anybody else got an answer for the first? But so so the first one, this is a very interesting situation. So you will have so 112A 50,000, other income 50 lakhs. See on 112 you don't have any tax because it has not exceeded 1 lakh. But again, what is very important is 50,000 is not exempt from tax, right? So that's a very crucial point. So since that is not exempt from tax, you ought to be slightly careful with that particular point. So the total income has now crossed 50 lakhs, therefore there will be a surcharge to be applied. So on 112 is 0. On the balance, you will have 13 lakhs 12,500. The breakup of this you can see up to 10 lakhs, you will have a tax of lakh and 12,500. Thereafter, you will have to pay 30% tax. Now there is a 10% surcharge will apply. Tax plus surcharge is this. But what is very important is it's very difficult for you to think about marginal relief under the exempt conditions. That is very, very crucial. Because my total income is 50 lakhs 50,000, there is a necessity for you to work out the marginal relief. Because marginal relief as a concept, first we'll try to understand for those who are not aware of the concept of marginal relief. So you have up to 50 lakhs, no surcharge. The once you cross 50 lakhs, you will have a surcharge. Now the problem here is because of the income crossing 50 lakhs on the entire tax, you have to apply surcharge. Now, as a result of it, it is always possible for you to have the incremental tax is actually more than the incremental income. So here, up to 50 lakhs, why I'm taking 50 lakhs? Because that 50 lakhs, there is no surcharge. Therefore, I'm using that 50 lakhs as a base. Now, for 50 lakhs, I have two options. I can take 112A 50,000, this 4950, or as an alternative, I can take this and this. So this is one advantage of having the Excel. So you can really find out now the tax has come to 14 lakhs 17,000. So whereas here, if I take 50,000 as 112A and 4950 as our income, my tax only comes to 14,01,400. So I'll just repeat again. If I take this as 0, I have two options. I can take 112A as 0, other income 50 lakhs. If I take other income 50 lakhs, so my incremental income is 50,000. My incremental tax is 131,250. So the difference between these two is what is going to be allowed as a marginal relief. So if I this method, I will get 1470. So let me restore my working. I'll take 50,000 as 112A. 4950 is the balance. Why should I take 50 lakhs as a base? Because up to 50 lakhs, there is no surcharge. So if I'm taking 50 lakhs as a basis here and then trying to work out, So always bear in mind, for a higher income, it's always better for you to have more of 111A or 120 or 111 when your income is on the higher side. When your income is on the lower side, normal rates will be better. If it is on the higher side, always 112A, 111A, 112 will be better. Just like your marginal costing, low fixed cost, high PV ratio. Low fixed cost companies will be better at the low base, high PV ratio companies will better at the high rates. That's the same point here. We have 10%, 15%, 20% tax for these incomes. They'll be always better off at higher incomes. That's why I just straight away put 50,000. But you can do trial and examination. So that's why I just wanted you to try this, because if you have tried this, then only you know what mistake you are actually committing this problem. So one of the most beautiful questions. You would not even imagine but this kind of combinations have been there. So that's why when you try and come back, it's always going to be more easier here. So I have applied margin relief tax thereafter. So final tax payable. Maybe if you need some time to take this down, please take this down. Then I'll go to the second situation.
நடு ரோட்ல வந்து படுத்துட்டு ஏன் பிரேக் போட்டா கேக்குறேன். நான் பிரேக் போடணும் நீ செத்து போடா. நான் சாமியா பட்டேன். நீ சாகறனால நாட்டுக்கு எந்த விதமான நஷ்டமும் இல்ல. ஒரு ரேஷன் கார்டு மிச்சம். சாகறதுக்கு எத்தனையோ வழி இருக்கு. காய்ச்சி சாப்பிடலாம், கிணத்துல குதிக்கலாம், ஆத்துல குதிக்கலாம், தூக்கல தொங்கலாம். அது
Are you now able to see the Excel sheet now? So now I think the calculations are pretty important now, because like if you've seen the working, so as such, so you have a choice here between 50,000, 4950. That's what is very important. So if I make this a zero, you can see the change it happens. So now it becomes 14 lakhs 17,000 now. So therefore always I will take this as a thumb rule. You always take, when these kind of situations, first for capital gains and then balance for other income. Don't confuse yourself. You will learn through experience as to why that is working that way, right? So therefore, let's make it pretty simple. So while calculating margin relief, when you have capital gains, first allocate it for capital gains and take the balancing figure. So I'll just go back to the original version, 50,000, 4950. So therefore, you will have, right. So this is one. So let's move on to the question again. So let's go back to so now the second question will be relatively an easier one. So Mr. Krish, a resident aged 65 years, his income details are as follows: capital gains under 111A, 1 lakh, and PGBP of 1.5 crores. So I think it's not a very difficult situation. The situation here is pretty simple in the sense like you are between 1 to 2 crores. That means the surcharge will be 15% for both. So I think not a very difficult situation. So only thing that we need to check the answer alone for this question. So if you already tried, guess can we have some numbers from you? Anybody who has got the answer for the question, number if at all you have. Anybody who can just throw the answer for the question. So do you have an answer? I'll wait for the answer. Anybody who has done the question. A lot of time has been given to you. Any guesses for the answer? போடு அர்ஜுன் நாச்சி போடு கீர்த்தனா போடுங்க அப்படியே செந்தூர் இவ்வளவு பேர் போட்டீங்க ஆன்சரை காண வேணாம் ஓ இது எஸ்ஆருங்கிறது எக்ஸல் சீட்டுக்கா டக் 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 எனி ஒன் ஆன்சர் I think Nitin Shinoy has got the answer right. Yeah, that's Vignesh 5172 700. Yeah. Right. So now this is actually 111A. That's the only point you must bear in mind. So, but as far as the so basically 112 will have 10% tax in excess of 1 lakh. So whereas you have 111A, you don't have any 1 lakh limit and all. So I've given it as 111A now in this particular question. There is no 112A, it's only 111A only. So therefore on 111A, you have to pay 15% tax straight from the first amount. You don't have a provision similar to that of what you have in the case of 112A. So plus 65 years is a senior citizen. So that is one thing which you have to take into account. That means the slab tax up to 10 lakhs is going to be only 1,10,000 only. So those are the 2 points which you should consider. The surcharge is not a problem, which you already given. Surcharge is 15% for both. So now let's go to the answer now. There it is. So those who got 5170 to 700, fantastic. So it's a so this is not 112A, 111A, 1 lakh. You'll have 15% tax on the same. On other income, you will have a tax of 43 lakh 10,000 because of being a senior citizen. First 3 lakh 0. So surcharge is not a problem. Both tax plus surcharge. So 5170 to 100. You can put a clap for yourself. Very nice. Those from this doubt, Surya and all very rarely miss, but doesn't matter. But still, sometimes when you make a mistake, you always learn better, right? So if you need to go through the answer, maybe you can go through. So I'll move on to third one again. So let us move back to the next question again. So again, if any one of you tried, so we have 111A 1 lakh, 112A 2 lakhs, PGBP 3.5 crores. Do we have an answer now? So can I have an answer? So if you've already done it, anybody answer for this? So any answers? Any answers for this? So we have Ratnavati giving some answer there. Nitin Shanai, let's see. So far, so Vignesh is right, Archana right, Aishwarya right, Ratnavati madam, Sriram Balaji right, Nitin Shanai right. Ratnavati madam எங்க track விட்டீங்க தெரியலையா? Right, so let's go to the Excel now for the answer for the question. So the concept, of course, the search as part of it we have already discussed. Therefore, let's move on to so there it is on. So basically, being a senior citizen, the tax rate first to 5 lakhs 0. That's the only point which you should bear in mind. So there are so many correct answers are there. Brilliant. So we'll have. So only thing is that the other income. So first 5 lakhs 0, and therefore 5 lakhs 10 lakhs 20%. Thereafter 30%. So I think search has should not be a problem. So there are so many answers of 13, 41, 19. Brilliant. I think terrific. So many people getting this question right. It's absolutely very, very happy and very, very satisfactory. There's so many people. That's quite amazing. So well done, guys. I think you are very much on track. Brilliant. So let's move on. Try the next one again now. So let's go back to the next one. What is the next one now? Situation. So we'll. So Ganesh, 45 years. His income details are capital gains 5 crores. This is the situation, or the one before that is there? Yeah, this one. So we have 111A 1 lakh, PGBP 5.5, 2 lakhs. So we already discussed, since your other income is excluding capital gains has crossed 5 crores, you have to pay 37% surcharge for business income. And for the capital gains, only 15%. This we already discussed. Quickly, any answers we have? So do you have an answer? Already have Nitin Shanai. So good. So very quick answers have come there. So some more, you just try. So they've already given the answer. I'm just waiting for you guys, just in case if you have not done. Fast. So we already have an answers come. So it's 231. So Nitin Shanai is just rocking like anything. So he's getting everything right, absolutely. So there it is. We'll So there he goes. Kirtana, Archana, Subiksha, so many answers, so many brilliant answers, brilliant, so many correct answers. So all of you deserve this wonderful clap. So many of you have got it right. Absolutely brilliant. So great, great. So those who have not finished the answer, just take finish off. So no problem. So whatever mistakes you commit here are good. So there is a famous Hindustan Lever advertisement. No, stain is good. So mistakes are good one. So it's better to do the problem, make mistakes rather than not doing it. So right, good, good. So fantastic. So now last one, I think that is see why that last one is very important. I'll tell you the last example is very important for one reason. See, the last one, this direct tax came because of an ordinance, right? That's an ordinance through which this was introduced. See, in the ordinance, this was not there at all. So only when they made it as an act, this point was there in the act. So therefore, any examiner who generally knows how the law is framed, now he will think of this situation because when it is an ordinance, this point was not there. But when it became an act, this point was there. Let's try to understand the situation. If I don't have a capital gains, my business income is 1 crore. I'm not subject to higher surcharge at all. But because of capital gains, the income goes to 6 crores. Therefore, I will have to pay surcharge at the rate of 37% on the business income. When this was pointed out, I think the government accepted this particular point and has given the relief when the ordinance became an act. At the time of ordinance, it was not given. When it became an act, this was given. Therefore, of all the situations, I think I will go for this situation, the examination. Let's once again see whether we have an answer here. So, come on, boys. What are the answer? You have been rocking. Come on. Some amazing answers. Let's see one more time. Who is all there? So again, Nitin Shanai once again has come out with an answer. Sriram Balaji. But I don't know. Are you all talking with each other? Everybody is giving the same answer. Let's see. Is the majority of the answer. That's brilliant. Once again. So there you go. The answer once again. Most of you are right. That's brilliant. I think I see all of you deserve lots of appreciation here. So many brilliant answers we are getting. So there it is. So whoever has got 12 750. Clap yourself. These are all small things which you have to enjoy. See, these are all, you must understand, not easy questions. If you're getting it right, more than these questions are easier. So you guys are brilliant. That's all. So beautiful. Very nice way of understanding the question. So I'm very happy the way in which most of you are going about. Brilliant. Clap yourself. This is something which all of you should be very happy about. Now, if you, I think the best way of understanding, discuss the situation with some of your friends. You will know that how brilliant you have done this question. So again, I just on behalf of all of you, just a big clap for all of you. Fantastic show. If you have any questions, please, I'll take it in case if you have any questions on this point. Now we'll move out of this particular segment now, and then we will move to the next part of it, relatively an easy one. So that is on the salaries now. The only one small change only in salaries, pretty easy one. So the change in the salary is on the standard deduction. So standard action was last year was 40,000, and when this 40,000 was given, there are two benefits have been taken out. So one benefit is by way of medical reimbursement, where every employee used to get 15,000 rupees. Then you also had an allowance called transport allowance, which is an allowance between residence to office and back. So that was available up to 1,800 600 rupees per month. So if you add to that 19,200 plus 15,000, I was getting a 34,200 rupees of benefit. So that two were removed and a standard action of 40,000 is given. Effectively, that means I'm getting only 5,800 rupees of benefit. Many employees were fuming that we really did not get 40,000. We got only 5,800. So therefore, they got the government did was it just wanted to give slightly more. So they added another 10,000 rupees. So the standard action was moved from 40,000 to 50,000. So when it was moved from 40,000 to 50,000, so one logical question which arose was whether the pensioners will they get this benefit? That is a question. So I think we must really compliment the government. They immediately gave a press release that even a person who are pensioners are eligible for two reasons. Because pension is taxable only under the head salaries. Because if you go to the charging section of 15A or 15B or 15C, they will always use the word present or the former employer. So therefore, it is taxable only under salaries. Once it is taxable under salaries, you must be automatically eligible for a standard deduction. So that's where you get a standard deduction is available for pensioners also. But what if the employee dies and thereafter the pension is paid to the family members? For example, my mother gets a pension after the death of my father. First, whether that pension to my mother, is it going to be taxed under the head salaries? The answer is no, because to come under the head salaries, there must be an employer-employee relationship. Now, since that employer-employee relationship is missing, the income cannot be taxed under salaries. Now, once the income goes to income from other sources, obviously you will not get the standard action of section 16, and you will get the standard action, however, under income from other sources. But under income from other sources, the standard action is only going to be 1/3 or 15,000, whichever is less. So 1/3 or 15,000 is. So very careful with this particular point. I feel it's a good chance of being a nice multiple choice question. So this is one small question for you. Just go through the question, couple of minutes for you to just go through the question. So A retired from service on 31st March 2019, is eligible for a monthly pension of 25,000 rupees per month. On 30th September 2019, A died and his pension paid to his wife from 1st October 2019. So discuss the tax implications of the pension in the hands of Mr. A and Mrs. A. So what I have tried in this particular question, A is going to get the pension from April to September. For A, the income will be taxable under the head salaries. Because the income is getting taxed under the head salaries, he will be eligible for standard action under section 16(1)(a). Further, the board has already given a press release. Pensioners will also be eligible for standard action. So therefore, in the hands of A, salary 1,50,000, which is 25,000 for the 6 months. Then you have a standard action of 50,000. Taxable salary income in the hands of A becomes 1 lakh. Even if the person has died, till the date of death he can be taxed. That's what you must understand. Till the date of death he can be taxed. That's not a problem. So then in the hands of Mrs. A, there is no employer-employer relationship. The income will go to income from other sources, which is again 1,50,000. Because the income has gone to income from other sources, you will not get standard action under section 16. If at all you are all wondering why we should have 5x of income, what is the big deal? Whether it is a salary or IOS, is there a big deal? Yes, it's a big deal. If the income goes to salaries, the taxable amount is only 1 lakh. Because income has come to IOS, a taxable amount has become 1,35,000. 1,000. So whether it makes a big difference to A and Mrs. A in their life, it's going to make a big difference for you as a CA student, right? So this will alter your rank. It might alter your results. Small question, it's a brilliant question, tested in the past, could be a multiple choice question. So whatever be this, just watch out for the small question. We always take salary and all are generally taken for granted. That's a problem. See, many times in life we take a lot of people for granted. So salary has always been that type of chapter. We take it for granted, but you have to be careful. That's the only point. So let's move on now. So to income from house property now. So interestingly, ever since you had this multiple choice question format was introduced, so income from house property is taking the second question seat in your part A of section 2. It's a very interesting deal. So normally high HP is not something which is pretty consistent or not like this when it compared to what it was before. But interestingly, the examiners are preferring high HP, but there are two important amendments also makes the high HP very interesting one. So let's see what is the position before the amendment. Now, as per section 23(2), if an individual owns more than one house property, the annual value of any one house property at his option is treated as 0. Such option to claim any one house property is self-occupied and be exercised by the C in respect of a house property occupied by him for his own residence, or could not be occupied on account of his employment or business or profession at any other place. For example, I'm working here, I'm transferred to Bangalore. So I cannot take my family now to Bangalore because it is actually going to be sometimes when the transfer happens during the middle of the year. I would like the family to stay here, complete the schooling or college as the case may be, and then join me. So therefore, or I take whatever bill. So therefore, due to my transfer, I'm not able to occupy the property. So there in Bangalore, I stay in a rented property. So in those circumstances, the law allows me to take the property in the Chennai as 0. If I also take the family or doesn't take the family, not a problem. But when I take the family which vacant also, I can take the benefit. But there was a dispute as to when my family occupies and I don't occupy, whether I can claim or not. And that's where I think this 23(4) amendment will help. Before I go to the amendment, this was the position. As per section 23(4), if the assessee has more than one house property, all the house properties other than the self-occupied property as per 23(2), that is one which you have taken as 0, the annual value of remaining properties will be computed as if such properties are deemed as let out and you have to pay tax on expected rent. So the government is aware of the fact that nowadays the joint family is the system, though as disintegrated, the nucleus family though is the norm. But I don't think the generation wants to leave the parents in a lurch. So they want them to be taken care, but at the same time, both of them need their space. This is the good trend. I mean, I won't say it's altogether completely not advisable trend at all. So everybody needs a space, but at the same time, they don't want to shirk their responsibility of taking care of the parents. Reverse also too. The parents also want to have two houses, one for them, one for the kids, so that there is a independence. At the same time, the family setup is also intact. So therefore, we want to get the best of the both. So therefore, the government, therefore, really what they did was they tried to make a change in the provisions. Actually, you can see here, I just put one house here in this slide, and post amendment, you will find there are going to be two houses. Interestingly, there was no amendment was carried out in 23(2), but the amendment was carried out only in 23(4). So what is 23(2)(4) saying? If the assessee has more than two house properties, then all the other properties other than the two properties nil will be considered as deemed to be let out. So that means from assessment in 2021, the concept of deemed to be let out starts only from the third property. Interestingly, as I said, 23.2 could have been also amended, but they have not done it. They've made only 23.4 change. But you don't worry about it from the examination point of view. You have to take two houses can be taken as 0. So work out the equation, finish off. So again, one question arises, all of you will be aware of. The interest on housing loan for a self-occupied property is available up to 2 lakhs. So one question which arises, will I get 2 lakhs for house 1, 2 lakhs for house 2? Both houses, I can get 2 lakhs to 2 lakhs. So therefore, they made 24B also subject to a change, but they specifically state the benefit of 2 lakhs will be available for both the properties put together. That means if you've taken two properties as 0, your total interest gets restricted to 2 lakhs for both the houses. That is the important point to be noted. So let's take this example. As usual, I'll give you some time for you to think on this particular question. Expected rent 10 lakhs, 15 lakhs, 20 lakhs. So interest on housing loan 1.5 lakhs, 1.8 lakhs, 1.5 lakhs, 10 lakhs. So take your time, maybe another 2-3 minutes for you to choose which of the houses will be taken as deemed to be let out, which other properties will be taken as self-occupied. So maybe we could. So we need at least 5 minutes. So I don't want a situation where I just keep work. It's one of these questions you can expect with this exam. So it's another very, very strong contender. Good chance for getting for 7-8 marks also. Just take your time, try. 5 minutes for you to try. So Nitin and Sriram, you have to give your HP for your answer. So Bharatwaj has got a interesting answer. So we have Subiksha taking but Subiksha, what's your answer? Your HP answer. Right. So we have fairly some good answers. I don't know. So how? So let's go to the answer now first. See, ideally, the way in which possibly we can proceed with this question. So first, let's take it as deemed to be let out. What would have been the answer for this question? So that's something which you have to consider in this particular question. So the net annual value 10 lakhs, 15 lakhs, 20 lakhs. 30% transaction 3 lakhs, 450 and 6 lakhs. 24B 180, 150, 10 lakhs. This would have been the high HP if house 1 is deemed as let out, house 2 is deemed as let out, and house 3 is deemed as let out. If house 1 is taken as self-occupied, high annual value will be 0, 1.8 lakhs of interest, 1.5 lakhs of interest, 2 lakhs of interest. So therefore, if I taken house 1 as self-occupied, house 2 is self-occupied, house 3 is self-occupied, this would have been my loss 180, 150 and 2 lakhs. But what is very important is now I can choose 2 houses self-occupied. So let's assume I choose house 1 and house 2 is self-occupied. I have a loss of 1.8 lakhs here. I have a loss of 1.5 lakhs here. The total loss comes to 3 lakhs 30,000. Now the only question what you must bear in mind, section 24B makes it very clear that the 2 lakhs limit for self-occupied properties will be for both the properties which are considered as 0. That means I cannot take 180 here and 150 here, 330. So again, bear in mind, the 2 lakhs restriction for set off, it's applicable only for adjusting with other heads of income, right? Please understand that when I set off against other heads of income under 71, 2 lakhs restriction is there. In 70, there is no problem. 70 is an inter-source adjustment. 71 as an inter-adjustment. So if 24B is not amended, I would have got entire 330 as my deduction. That's what you must understand. So don't confuse here. set off within the same head of income, loss from house property, no restriction. I can go any amount for inter-source adjustment, not a problem at all. Only when I do for inter-head adjustment, I can set off only up to 2 lakhs, balance, carry forward. So therefore, this is a very interesting point. When you go to the next slide, you will be in a position to understand this particular point. So I'm choosing house 1 and house 2 as self-occupied, house 3 is deemed to be let out. So what I'm trying to do is, I'm picking from house 3 deemed to be let out, income is 4 lakhs, which I've taken here. So I deemed to be let out, income 4 lakhs. Two self-occupied properties answer are zero annual value, though the interest is 180 plus 150, 330. I'll have to restrict it to 2 lakhs. That means this option gives me 4 lakhs, 2 lakhs loss, net income of 2 lakhs. So here I have same thing. What I'm trying to do is choosing house 2 as deemed to be let out. As you can see, if I choose house 2 as deemed to be let out, 9 lakhs my income. I'm taking from this table, 9 lakhs I've taken. So then the total of interest for self-occupied property, both put together, is going to be restricted to 2 lakhs. Therefore, get 7 lakhs in this option. And the last one, so deemed to be let out, if I'm going to choose house 1 is 520. And then I have 2 lakhs for self-occupied, 320 here. So since the first one is resulting in the least income, therefore I have to choose house 1 and 2 for 0 and 23.2 and house 3 as deemed to be let out. So we have Subiksha getting it right. I don't know, Archana has retracted her message. We are not able to think. Pona, I don't know her final answer. I'm not able to get that. Bharatwaj, absolutely right. So Sandhya seems to have retracted her answer. Sriram Balaji, first one to answer, but 3,20,000. I hope that I think you're choosing the last one as a combination, but however, that's not the answer. So it's another equation. Expect this equation. This is something which you should expect for this exam. One of the very, very strong contenders for this examination. So if you do like this, it's going to be a lot more easier for you. First, try to work out the deemed to be let out first. Take what are the answer for self-occupied through the combination, and then you can always get it right in the examination. So if you need some time to copy the answer, please do it. No problem, Archana, doesn't matter. Subiksha, good, very good answer. Who else has got? Bharatwaj, very good. So two of you have got it right. So when you get the answer for this question is right, I think definitely you should be can be happy about the way in which you have gone. Omega, you later on the answer full Good, Bharatwaj, very nice. Who has got the answer right? Subiksha, good. Whoever got 2 lakhs as answer, just but those who have not got 2 lakhs, just find out where you went wrong in this question. Right. So yes, Ramchandran, you can go ahead. What is your doubt? See, for house 3 deemed to be let, there's no restriction at all. See, Ramchandran, there is no restriction for deemed to be let out properties at all. There was no interest restriction. You can claim any amount of interest. That's what I'm saying. You are confusing here. There is maximum housing loan interest of 2 lakhs as a concept is wrong. So you are incorrect in terms of the concept. See, there are 2 points you must bear in mind. See, the restriction for self-occupied is given, or nil annual value properties are given in house property chapter itself. Overall loss restriction of 2 lakhs is given not even in 70, only in 71, only when in interrate adjustment. So that is why you should not confuse on this particular point. And you already put, you have understood, fine, fair enough. I'll proceed now. So it's another interesting provision, section 23(5). So 23(5), I'll just try to give a small briefing on this 23(5) as to why it has to be introduced by Finance Act of 2017, and then what change has been made now, and then we will also do one problem to understand this particular point. See, there are large residential properties for constructed by many property developers. If you go to the OMR road, you will find 500 flats, 600 flats, phase 1, phase 2, phase 3. So you will find a lot of housing projects were done on that lines. So when they try to do such a huge properties, it is not possible for them to sell the properties immediately. That is not possible at all. It takes some time for the properties to actually sell. So during the period where the property remains unsold, some developers used to let it out. That's why you will always find the advertisement saying that rent is available. So they always used to come back and say the moment you buy the property, assured rent. This is the kind of advertisement you'll get. How they know you will get assured rent is because of the fact some of them are able to let it out on rent. So interestingly, the income tax department took a stand that once you let out the property, all unsold property, irrespective of whether you let it out or not, should be taxed for 2 reasons. One, the income should be taxed under high HP. And once you come to income from house property, there is no necessity for you to derive actual income. So one very important aspect about income from house property, expected rent is your income. If your actual rent is more, you can take actual rent. And if actual rent is less on account of vacancy, you can take actual rent. Otherwise, expected rent is income for any house property. But however, the assessor's contention was, this is my business and this is properties are held as a stock in trade. Therefore, the income should go to business income. In business income, there is no concept of notional income. The concept in business income is only the real income. So if you are getting a real income, you should pay tax. Otherwise, you should not pay tax. Please understand one important point. If my main business is letting out, then the income will be taxed only under business income. The main business is letting out. Here, my main business is not letting out. My main business is to sell the property. So therefore, the Supreme Court has already held, if your main business is letting out, rental income will go to business income. If your main business is not letting out, then rental income will always be taxed under income from house property. So once the income is taxed on the house property, the question of deriving the rental income does not arise. So therefore, the income tax department said that you have to pay tax on all unsold properties. Just visualize, I have 1,000 properties completed and I'm able to sell only 300, 400 and remaining 600 properties on expected rent. I have to pay. This large project will have a huge setback at the time when the real estate sector is already reeling under some kind of a pressure. The government considered this particular point. They introduced section 23(5). So 23(5) says where the property consisting of any buildings or the lands pertinent thereto is held as a stock in trade and the property is not let during the whole or any part of the previous year, the annual value of such property for the period up to 1 year from the end of the financial year in which the certificate of completion of construction or the properties obtained from the competent authority shall be taken to be 0. So therefore, this is a very good point to support the real estate companies. They brought this point. Suppose I get the project completion, say now, so which is in the month of May 2020. So end of the financial year, 31st March 2021. 1 year from the date, 31st March 2022. So the 1 year is counted from the end of the financial year. However, still you find large projects are not getting fully sold. It takes more time. In fact, the Honorable Union Minister suggested that the real estate companies should even sell on a cost-to-cost basis, or they should not even mind selling on a loss, because you need funds. Don't hold it. If you're selling tomatoes or any perishables, you sell in the morning at 15, 20, 15 rupees, 20 rupees, or 5 rupees, but at night, 8 o'clock or 9 o'clock, you sell at 1 rupee or 2 rupees because it's perishable. Tomorrow it's got no value. That's what you read in your costing, sunk cost. Cost already incurred, and tomorrow it's got no value. So you buy flower at 6 p.m., you may have to pay 120 rupees. You buy flower at 9, you may get at 2 rupees. But real estate companies, because it's not perishable, are holding on to the stock. And that's where they're not liquidating it, because they always feel that the value will go up and go up and go up. Therefore, they are not selling at the property. But however, on a consistent request of them, there is a small amendment is made. So instead of that 1 year, they're given 2 years now. So that means if I completed the project in May 2020, earlier I had to finish end of the financial year 31st March 2021, 1 year from the date 31st March 2022. Now what they have done is, so end of the financial year 31st March 2021, 2 years from the end of the financial year 31st March 2023. Very interesting amendment. Just watch out for the way in which I would like to look at this particular point. If my main object is letting out, the rental income will be taxable under PGBP. If my main object is selling the property, the rental income I get in between is only IHB. And again, this 23(5) will apply only when you have not let it out. If you let it out, section 23(5) will not apply. This unsold stock not let out, this section will apply. So that's about this particular section. Small question for this. So need not have to pay tax on unsold stock for a period of 2 years if the same have not been let out. So one small question, you just go through the question. The question looks big, but I think the answer is very easy. So let's just go through the question. Maybe take a few minutes of time for just reading the question. So Venki Housing is engaged in the business of constructing residential and commercial properties. The company showed 100 properties in their closing stock in the balance sheet. The construction of all the above properties were completed in June 2017, and the project completion certificate was also obtained on the same month. That means I have obtained the project completion certificate in June 2017. The company let out 25 properties on the monthly rent of 50,000. As suitable buyers could not be found. All other buildings were not let out. The assessing officer brought all the house properties to tax under IHP. The company contends that the income should be taxable under PGBP, and hence only the rental income from the 25 properties alone are taxable. State with reasons whether the claim of the property is justified. So again, June 2017 is the completion. End of the financial year, March 2018. Had this amendment had not been carried out, 1 year from the end of the financial year would be 31st March 2019. Therefore, you would have come to a conclusion this property is taxable. But what is the amendment is saying? The amendment is saying you should complete 2 years. So 2 years means 31st March 2020. So for 25 properties that are actually let out, I don't get this benefit. For the 25 properties, as the remaining 75 properties, which I'm not let it out, I will get the benefit. So again, the only point which possibly some of you might get confused here in the examination, this property is completed in June 2017. Whether the amendment made by Finance Act 2019 for assessment in 2021, the amendment was made now. Should this amendment be applicable for the properties which are completed in June 2017? That could be the only one dilemma for you in the examination. For what the answer is yes. This section will apply even for properties which are completed earlier period also. So let's move on to how you should write the answer to this question. Now, section 23(5) provides where the property consisting of any building or the land appurtenant thereto is held as a stock in trade, and the property is not let during the whole or any part of the previous year. The annual value of such property for the period up to 2 years from the end of the financial year in which the certificate of completion of construction of the property is obtained from the competent authority shall be taken to be as 0. So here, up to this particular point, you'll get 2 marks. So that's what you must understand. It's a step marking, you'll get 2 marks for this. Now to get the final 3 marks for the question, in the present problem, project completion certificate was obtained in June 2017 and hence till 31st March 2020, which is 2 years from the end of the financial year and not the date. The annual value of unsold properties which are not let out will be taken as 0. The contention of the assessee that the property income is taxed under high HP is not correct. Mention this particular point because the assessee says that I won't have to pay tax on the 75 properties because the property is taxable under business income. That is not the question. The property is taxable only under high HP only. Only when the main business is letting out, it will be taxable under business income. Your main business here is buying and selling a property. Therefore, you will get the benefit only up to 2 years, provided you also don't let it out. So for the reasons referred above, the income of 25 properties actually let out to be taxable under high HP. Remaining properties not taxable up to 31st March 2020. You should negate the summation. Company's contention, you have to evaluate, specify whether it is right, then come to the conclusion. If you're going to come back and say this property not taxable, IHB, not IHB, that's thing, no. You have to first write this, and then you go and talk about why it is not taxed. Contention of the evaluate, conclude his contention is wrong, though his conclusion is right, his contention is wrong. Many times I always get this question from the students. So my answer is right. Yes, your conclusion is right, but the way in which you concluded, that is what is very important. So contention, conclusion, both are very important. Mere conclusion resulting in an identical conclusion with a different reasoning may not fetch you marks. You should conclude by the right reasoning. That is what is very, very important. So again, as I said, this is going to be one of my favorite questions. I'm not sure at the intermediate level whether the examiner will pick this particular point. But having said this, high HP has always been one of the dominating one after this 30 marks MCQ introduced. And of course, marking pattern for various topics. So I'll go to profits and gains for business or profession. Again, this is one problem I will definitely bet on for this particular examination. So we have Bharatwaj, you want to still see the question again? Bharatwaj, are you clear or you just want explanation for this question or? Okay. Right, let me just go to my favorite pick for this examination by a big distance. I still strongly believe that this will be our question. Business income, that's going to be part of a separate question, or this is going to come. Very, very important provision. The question is which question number? It's not about anything else. The only thing is that but there's going to be page number, it will be there in MCQ, it will be there in a regular question or part of total income. And it's very, very difficult for the examiner to keep this discussion out of this question paper. Very tough. So all of us know motor car will get 15% depreciation. And if the motor car is used in the business of running it on hire, then you will get 30% depreciation. So the automobile sector has been pushing for some kind of a concession. They want the GST to be cut. They want a scrappage policy to be followed. They also wanted higher depreciation. So therefore, they have been requesting a lot of things on account of what they felt was there is a slowdown. However, the government also felt if Kia Motors and MG Acquire can sell so much, plus, of course, the finance minister herself was trying to point about this new generation is more using Olas and Ubers, because now we don't use anything. That's a different story. Therefore, she said that the auto industry has to adjust itself to the realities. But having said this, she just tried to give one benefit for them, in a sense, like to motivate the people buy, they wanted to give a higher rate. So the higher rate of depreciation was given for normal motor cars at the rate of 30%. For motor cars, buses, lorries, which are run in the business of running it on, for Ola or Uber, you will get 45% depreciation. Similarly, for the lorries and buses, you will get more depreciation of 45%. But however, this act came into effect, or the motor car for the purpose of this higher rate has to be acquired on or after 23rd August 2019, but before 1st April 2020, and motor car must be put to use before 1st April 2020. Very important point. So the acquisition has to be between 23rd August to 31st March 2020. And the car must be put to use before 1/4/2020. So that's a very important point. So if you buy on 23rd August 2019, then as against 15% rate, you will get 30%. It's very important note. To come under a particular block, you should understand the block of assets concept. So under the block system, in order to be brought into a particular block, the assets should belong to the same class of assets. It must be eligible for same rate of depreciation. So here, the rate of depreciation for the motor car in Rule 5 Appendix 1A, which provides for the rates of depreciation, has been increased from 15 to 30%. That means if you're acquired between 23rd August to 31st March, motor car will move to a separate block. So if you buy up to 22nd August, motor car will be in a different block. So therefore, the block itself is going to undergo a change. That's what first point you must understand here. So there is a block change. So the rate of depreciation is 30 or 45. That means I move to a separate block. The next question with there is will the restriction of 50%, all of you will be aware of, if the asset is put to use for less than 180 days, then you are entitled to get only half of the normal rate. So this provision came only on 23rd of August, for acquisition, because it came through. So therefore, there are a lot of delay in the announcement of this. Therefore, one expectation was that they will not put this 180 days condition for these assets, but unfortunately, the 180 days condition is also there for these assets. So the 180 days restriction is there in 32 provides. So that has not been changed. That means you will get depreciation of only 50% of the normal rate, which means you will get 15% or 22.5% if the asset is acquired after 4th of October. Why 4th of October? Many students think it is 30th of September. See, there is a difference between 6 months and 180 days. The law is not talking about 6 months, it talks about 180 days. And since this being a leap year, up to 4th October, if you put to use, you will get 180 days. 2nd October to 31st March, normally 181. Because the leap year, 2nd October to 31st March will 182. 3rd October to 31st March, 181. 4th October to 31st March, 180. That means if you put the asset use on 5th of October or if you acquire after 5th of October, then only restriction will apply. This is something which many of us normally miss out in the examination. So the time limit for putting the asset use is 5th of October only. So just watch out for this. It's very, very easy to predict the appearance of this smart equations which should be there for you in the examination. There are something which I given on the left hand side which you ought to be careful about. Since the rate of depreciation is different, separate block must be created for car acquired between 23rd of August to 31st March. And whether second-hand car is eligible, the answer is yes. So the law does not restrict between the first car or the second car, used car or new car. You will continue to get depreciation at the high rates, even for second-hand car. So very important provision. You have to ensure that we are to understand this correctly. The chances of this not happening are very, very, very remote. See the last point. If the car is put to use from 5th of October, this is very crucial. Then only you should restrict. So to understand this, we'll have one question. So as usual, I'll just give you a few minutes of time for you to solve this question. Determine the depreciation administered based on the following information. WDB as on 1/4/2020. 10 cars, eligible rate 15%, 10 lakhs. Cars sold during the year on 1st August, entire opening balance 5 lakhs. Cars purchased during the year, put use on the same day. 4th October, 1 car for 7 lakhs. 1st February 2000, 1 car for 8 lakhs. So make a quick note of this question. Take some time. It's 12:56, maybe 4 to 5, 6 minutes. So the first answer comes, the moment one answer comes, then I will take that time is over. Lokesh has given the answer. Lokesh G has given, let's see. Aniruddhan 4 lakhs 5,000, Lokesh 3 lakhs. So first one, the car 15%, that block is gone because all the 10 cars in the block were actually sold by 1st of August. Therefore, it will be straightaway capital gains 1B 50 subsection 2 will apply. So block 2 car 30%, there is no opening balance. So up to 4th October, as I already said, you will get full depreciation. So on that 7 lakhs, you will have 30%. On the 8 lakhs, which is put to use for less than 1 days, you'll get 30% into 15%. That will come to lakh and 20,000. So 30% of 7 lakhs, that will be 2 lakhs 10,000. So 330 will be the depreciation. Always try to give the closing WDV, which will be the opening WDV for the next year. So Vignesh 330. I don't know how Lokesh and Sriram Balaji is getting 3 lakhs. See, as the entire cards were sold. If you see the equation, entire opening balance is sold in 1st August itself. So see, 45% will apply only for cars which are used in the business of running it on hire. So if you have done with, I'll go to the next question. So Aniruddhan, that for that question, this is not like your. That's a very good question. It's a very interesting question. So that is typical of. So Aniruddhan, we can always take some good questions from him. So Aniruddhan, the point that this is not like additional depreciation provisions where you get the balance in the next year. So this will be part of block of assets 1B. You will not get the balance in the next year. But it's a very good question. But this concept applies only for additional depreciation, not for motor car. So that means it will be now part of your regular block only. So that means the next year you will get 11, 17 to 30%. It's a very interesting question. So just given one more question, so we can just try this relatively more easier one. So as soon as the first answer comes, I will go to the answer for the question the moment you get the first answer. So relatively an easier one. So we have 2, 3 answers have come. So see, in the 15% block for the next year, that cannot be a concept of less than 180 days at all. That's what you must understand. In a car, 15% last year, no chance of you having the concept of less than 180 at all. So that's what you must bear in mind. So once you consider that particular point, which will be more easier for you to solve the question. So less than 180, no chance at all. So we'll just check the answer for. Just give me 2 minutes time. So on block one, so you should get 7,50,000. $825 from Padmavati. So okay, 750, 825, 9 lakhs, 825, Aishwarya 9 lakhs. So that's a very interesting answer. So we'll see. So we have a lot of answers. Now let's go to the answers now. So now you have opening balance of 10 lakhs. There is an addition of 5 lakhs will go into that block. So anything which is purchased after 23rd of August will move to, so 10th August purchase. So we'll go to the first block. So the last 3 assets will go to the 30% block. So for the first block at 15%, you will get depreciation of 15% on 15 lakhs, which will come to 225. So the purchases on 30th September and 4th October for the reasons already mentioned in the previous problem, 16 lakhs 9 plus 7, 16. You'll get 30% of that, which is 4 lakhs 80,000. And on the addition which is made on 1st February, you will get 15% depreciation. So the total of depreciation for 30% block, 420 plus 180, that will come to 6 lakhs, and for the 15% block is 225. So therefore the total comes to 825. We have quite a lot of 825 answers for this question. Ratnavati, Ramya. So 2 answers of 825. So other than 825, some 9 lakh of answer and all the stuff. It's so Sriram Balaji 783. Okay, that's fine. That's so that's so 825 is the correct answer for those who got 825. Definitely. So again, pair off is definitely a very interesting question, but others so near and yet so far sometimes it happens. So the Ramchandran you are trying to put directly, you should put blockwise, it's a lot more easier. So that's on the depreciation. So almost close to 100%. This is something which I don't think the exam is ever going to miss this. So that's why, the amendments of this year, especially for the intermediate, are definitely, most of them will come. They're very, very important. They're generally in the radar. I think we should really watch out for. Definitely some good questions you can expect. So these are some of them I have tried with an example. So now we are in. So we'll take one small provision is there. We'll just try to consider that. Then we'll. So this is one other provision in business income which has undergone a change, which is on section 35, 80, 40A, 43, for a lot of sections. These sections, if you just recall, these sections used to say that you should make the payment by an account pay check or an account pay draft, or through an electronic clearance system through banks. That means these electronic clearance system through banks are IMPS, you have RTGS, NEFT. These are the easiest of the banks. So whether you can make a digital payment, whether you can make by Paytm or other mobile wallets, whether that will be considered or not, has always been a matter of debate. So in order to clarify beyond doubt, so what they have done is they have given that 35, 80, 40, all the sections will also include other electronic payments to be specified by the government. So therefore, all digital payments will here and after will not suffer clearly any disallowance. Because of the language use section was only talking about account pay check, account pay draft, or electronic clearance system through banks. So whether mobile wallets, whether they were covered or not, was always under the dispute. That the section is trying to clarify beyond doubt. So that's where we stand. We are now already at 1:15. So what shall we do? So I think maybe so we've already spent close to 3 hours now. So can we'll continue. I I feel it's better we continue tomorrow. So because of anything beyond 3 hours, no, we become sometimes pretty rusty beyond a point of time, because we have got a lot of amendments still to be taken. So some very good amendments in capital gains, chapter 6A, TDS, filing of returns. All of them have some definite marks in the examination. Capital gains has been one of the questions in the examination. So it will take another, because we have 2-3 problems in capital gains, a lot of problems in this. It will take at least another 3 hours. So I think even if you resume at 2, it's going to become too late. So therefore, let's have it at tomorrow. So if you have any questions on what we discussed so far, please just put in the chat box. I'll clarify anything you have. So if you do not have any question, maybe 1 or 2 minutes for you to just put any questions. You have any specific question to not be discussed. So it will take another 2-3 hours of time. So in case if, so as I already told you, so still TDS, filing of tax returns, capital gains, chapter 6A reductions, all of you will be aware of capital gains has always been one of the questions post the 30 marks MCQ, 70 marks descriptive. And there is a specific mark allocation is there for clubbing set off in deductions. And very interestingly, chapter 6A deductions has not come as a separate question. That was very surprising. Chapter 6A used to be a separate markings pattern is there. So that is something, one question surely on 80E will definitely be there. TDS, one question is allocated, a lot of changes in TDS. So therefore, I think our next session is also going to have another 15-20 marks, definitely. So marginally, Archana, what I will do is we'll do one question on marginal lift. So I'll just explain marginal lift concept again. Basically, the concept of marginal relief arises because up to 50 lakhs, there is no surcharge. Up to 50 lakhs, there is no surcharge. So once you cross 50 lakh, there is a 10% surcharge is there. And once you cross 1 crore, 15% surcharge is there. Once you cross 2 crores, you have a 25% surcharge. And once you cross, you have a 37% surcharge. So because of this, your incremental tax could be more than incremental income. So therefore, what we are trying to do is the incremental income. Just assume for a moment, I get an incremental income of 1 lakh. And whereas my incremental tax is more than that. I cannot have a situation where my tax is more than my incremental income. So therefore, the government has given the relief for the surcharge part of it. Even today, because of the cess, your incremental tax will be more. So therefore, the idea began the margin relief. Your incremental tax cannot be more than your incremental income. That is the concept. But still, it can be more on account of cess. That means if you are calculating at 50 lakhs, zero surcharge. Therefore, when you cross 50 lakhs, take 50 lakhs as the basis and work out what is the tax on 50 lakhs, what is the tax on amount beyond 50 lakhs, compare. Similarly, 1 crore, we have to work out with above 1 crore, 2 crores, 5 crores. That's how we should work out. So maybe we'll try a normal question without capital gains on one marginal lift in the next class. So as I told you, so in case if maybe for the next session, if you have any of your friends also want to join, you can please ask them to join. So definitely this is something that's got some very, very good marks in store for you. If you feel that we have to give you this PowerPoint first, the amendments first to you, if that will be of some help to you, what I will do is I can share. So that before you come to the class, we can also have side by side the thing. The only challenge normally what we experience is that once this material is given to you, you will be more focusing on going through the material. That's always happened in the class also, because generally we don't have the tendency to listen to the session. We always go to the material. If you're not able to understand something, at least you're asking me now. Otherwise, you will just try to check with the PowerPoint. That's the reason why we don't share first. Then we share after the session is over. I think up to this point, what we discussed, I will share that immediately. And maybe, as I said, once the next session is over, we'll have it. So let me check. I think if there is so tomorrow we'll just try to keep it at what time will be at 8 o'clock in the evening. Is that fine? So can we have it 8 p.m. tomorrow? If you have any so Manikandan, you can see as far as your November 2020 exam, we have to see the May 2020 question paper. Whatever amendments which has not come in May 2020, it will come in November 2020. That's how the general rule. So until such time, so we will have that have to factor that on. So and I can't comment on November 2020 without seeing the May 2020 paper. So Aishwarya, GST class will first we'll have one session of GST class, and after post that we'll have this. So I'll try to find out whether he can take a little bit early. So let him have at 6:30 to 8, and then I will have at 8 o'clock because it's class 7. So see if I started, so only thing is that I can request him to have between 6:30 to 8 so that I can continue thereafter. Otherwise, what will happen, so if I'm going to start before that, and if it's not getting over tomorrow, so we'll have one more extension with that, which I don't want. So, we'll manage the GST class. We'll just find out. I'll speak to him. So let him have it 7 to 8, or we'll keep you posted on this. So it's our internal this thing. We'll make the changes according. Thank you, friends. Definitely, I'm very, very happy with the way in which a lot of you have answered the questions. Quite a terrific answering of the question. So I would say that it's brilliant is an understatement. Some answers were quite amazing, and most of you got it right. So I'm very, very extremely happy the way in which most of you are going about. So keep this tempo going. I'm sure that you will get a lot of marks in the examination. Plus, of course, more than the marks, the knowledge part of it is something which is quite amazing. So we'll resume at 8 p.m. tomorrow. So as I said, it's wonderful having all of you. I really enjoyed it. Hope you have also enjoyed it. So we'll continue tomorrow at 8 p.m. Thank you.